Good morning, everyone. Good morning, Jeannie. Good morning, Karthik. Good morning, Mamta, Hemant, Pooja, Shabir, Stephen. Good morning. Okay, so today we start up a new standard that is Ind AS 12, which deals with income taxes. A very important standard practically because income taxes are definitely there in our business structures. We get to see it on a regular basis. And in addition to that, we also have concepts of deferred tax, current tax, and all these kind of terms which we come across on a regular basis. So that is why this is a fairly important standard from a practical perspective. From your examination perspective also, we see certain applications of these of this standard in particular. Okay, either you get a standalone question or it comes out as a question that is built along with certain other questions. So from that perspective, this has both a direct value in terms of examination as well as it gets plugged in along with certain other standards as well. So when I talk about Ind AS 12, what we will be going through is why do we need this particular standard Ind AS 12? What are the definitions which are there? Most of it are very simple. You will be able to understand them easily. Then we will look at how to compute the deferred tax, certain special cases, changes in tax status, and disclosures. So with that, I think we should be in a position to close our discussions on this standard in the next session as well. Okay. So with that, let us start our discussions. All right. So when I talk about income taxes, it specifically means only the taxes related to your income, your GST, customs, all of those are excluded. They go in line with your general accounting principles. Okay. Now, why do I need this particular standard? See, what happens is your taxable, your income tax, it's computed on what? It's computed on taxable income. And how do I determine the taxable income? Sir, the taxable income is determined in accordance with the tax laws that are applicable to the entity. My starting point will definitely be the profit which I have made during the period, and that is the profit which I have reported. But there will be certain additions, certain deletions, certain deductions, certain disallowances to arrive at the taxable income. And on the taxable income, we go and compute the tax. Okay. So now what happens is a reader of financial statements will look at the accounting profit. He will look at the tax provision that you have made, and he will try to correlate with the rates in tax that with the rates of tax that are currently in force. And this correlation will not match because the manner in which the taxable income is computed is different from the accounting profit. So I need a bridge. I need a bridge between the tax on the accounting profit versus the tax on the taxable income. There has to be a bridge so that the reader of financial statements will understand why there is a gap in the tax that I have computed. Are you able to understand? Yes. So that is the fundamental reason why this particular standard was introduced. Okay. So if I have to look at the objective, it is to prescribe the accounting treatment for income taxes and to account for the current and future tax consequences of future recovery or settlement of the carrying amount of assets or liabilities recognized in an entity's balance sheet, as well as transactions and other events of the current period that are recognized in an entity's financial statements. Where do I take this? Well, if the income or related taxable profit or accounting profit is gone to the P&L, the tax implications also will go in the P&L. If we have certain items recognized in other comprehensive income, like for example, in your employee benefits, we saw that the impact of changes in actuarial assumptions will go to other comprehensive income. So the related tax on changes in actuarial assumptions also will go to other comprehensive incomes. In some cases, it can go to statement of changes in equity as well. We'll see these cases as the time progresses. Okay. So what I will be doing is I will come back to these definitions, but before the definitions, let us understand why this particular standard was required. Okay. So let us try to understand with the help of this question. Okay. Then you can, try to look at the definitions and understand what do you mean by current tax, what do you mean by deferred tax, etc., etc. Things will happen faster. Okay. So now let us commence this question. TriStar Limited acquires a machine for rupees 8 lakhs and decides to depreciate it straight line over its useful life of 4 years. Okay. So what is happening is this depreciation is allowable for accounting purposes over 5 years of useful life. Income tax legislation allows depreciating these machines over 4 years. So the same machinery for your income tax purposes gets depreciated over a 4 year period. So what we call this as an accelerated depreciation under the tax laws. In years 1 to 5, TriStar Limited's taxable income before tax and depreciation expense is 4 lakhs and the tax rate is 30%. Show TriStar Limited's current tax, deferred tax expense, DTA, DTL, and the net profit in the years 1 to 5. So these are new terms probably which you are hearing. Of course, we had a standard AS22. So let us try to, understand the implications of this question in detail before we proceed. Okay, so now let us go step by step. I hope the screen is visible. So I have this asset. Okay. Okay, fine. Okay. So what is your profit before tax and depreciation? 4 lakhs. Are you able to see this? 1, 2, 3, 4, 5. For each of these periods, it is 4 lakhs each. Okay. The depreciation that you are getting is 8 lakhs over a 5 year tenure for accounting purposes. So 8 lakhs divided by 5 is equal to 1,60,000. So therefore, my depreciation which I have reduced is 1,60,000 per annum. So that gives me a profit before tax of 2,40,000. Is it okay till now? Yes?
Yes, sir.
All right. Now, if I had to stop here, forget, yeah, Karthik, tell me. You have raised your hand.
Please continue, sir. It was one mistake.
Okay, fine, fine. All right. So you have your accounting depreciation and then the profit before tax is standing at 2,40,000. So at the rate of 30%, your tax expense should come to 72,000 per annum with a resulting net profit after tax at 1,68,000 per annum. So this is understood, right? So this is what the situation would be if it was ideal. Now, the income tax law gives you a depreciation over a 4 year tenure. So 4 year tenure means my annual depreciation comes to how much? 2 lakh rupees, right? And in the 5th year, there won't be any depreciation. So what will happen is each year I will get a deduction of depreciation of 2 lakhs. And in the 5th year, it will be zero. So in reality, your tax expense looks something like this. 4 lakhs per annum, 2 lakhs depreciation for the first 4 years, and in the 5th year, it will be zero. In the 5th year, it will be zero. So your tax expense will be 60,000 for the first 4 years, and 5th year, it will be 1,20,000. Are we okay with this calculation? Yes, everyone?
Yes, sir.
Monica, समझ में आ गया?
Yes, sir.
Yes, okay. Jeannie, Pooja, Usha, Mamta, Karthik, Hemant, all clear? Yes, okay. So that takes care of current tax expense. Now, let us move on to the net profit. How does it look like? See, my accounting depreciation is 160, income is 4 lakhs. So 2 lakh 40 per annum. This is the same what I got here. Yes. Now, my tax expense is coming from here because your tax expense is computed as per the tax laws. So 60 for the first 4 years and fifth year is 1 lakh 20. So your net profit is coming to 180 for the first 4 years and 1 lakh 20 for the last year. What is the anomaly that we are able to see here? Or what is something abnormal that is happening? If you look at this particular table, there is something which is quite abnormal. What is it?
The net profit is different because of the difference in accounting depreciation and tax expense depreciation, sir.
That's right. So if you give this profit, these financials to an investor or to a reader of financial statements, he will say, year 1, 2, 3, 4, 5, you have the same accounting profit. Then why is it that your tax expense has changed when the tax rate also has remained the same? Your tax expense for years 1 to 4 is the same, and in the fifth year, it has suddenly doubled. 60,000 became 1 lakh 20. That means your tax expense, if I have to look at it from a reader's perspective, the reader will say first 4 years it is 60 by 2 lakh 40. So this comes to how much? 25%. And in the fifth year, it is 1 lakh 20 by 2 lakh 40. So this comes to 50%. So what is happening is the reader comes to a conclusion that the first 4 years tax rate is 25%. The last year it is 50%, but the statutory rate is only 30%. So where is 25? Where is 50? Where is 30? Nothing is clear from the books, from the accounting books. And that is why we are required to have a separate standard on income taxes. The problem is this inconsistency that arises. Why has this inconsistency arose? Because of the accelerated depreciation which is available under the income tax. Yes or no? Bolo?
Yes,
Yes?
sir.
All right. So if I look at the difference in tax, yes, now just pay attention carefully. 72,000 versus 60,000. Can I say that the tax difference is 12,000? What is 72? If the income
30% off.
tax also allowed the same depreciation or whatever it is on accounting profit, 72. Minus 60, what is your actual tax expense? So first 4 years, it is 12,000 difference, correct? Versus this. And in the fifth year, 72 minus 1 lakh 20. So this comes to how much? Minus 48,000. Are you able to understand? Yes. This
Yes,
12,
sir.
12, 12 and 48, did you follow? So are you seeing a pattern? Are you seeing a pattern? Each year, I have a reduced income tax by 12,000. Yes, because of the accelerated depreciation, my tax liability has reduced by 12,000 per annum. And in the fifth year, there is no tax depreciation because my asset is fully depreciated. So therefore, there is an increase in the tax expense by 48,000. Are you able to understand this? Yes, everyone?
Yes,
Jeannie,
sir.
are you able to follow?
Yes.
Yes. Pooja, Monica,
Yes, sir.
ठीक है. Okay. Stephen,
Sir.
Shabir, hope you are able to follow.
No,
Usha,
sir.
okay. Yes. All right. Now, is there actually a tax saving that is happening? If I look at all the 5 years, is there any tax saving that is happening, or it is actually whatever income I have earned over the 5 years, tax also is paid over that 5 years, and on a 5 year basis, the tax expense also is correctly calculated. Can I make this conclusion? Yes.
Sir.
Yes, sir.
If I look at the cumulative 5 year picture, whatever tax I have booked here, 72,000 into 5, and whatever tax I have booked here, which is 60,000 into 4 plus 1,20,000, is exactly the same. So this reduced tax, what we are seeing here of 12,000 per annum is not a reduction. It is a postponement of the tax. I am postponing this to the 5th year. I am postponing this to the 5th year. I am postponing third to year 5, fourth to year 5. So there is a postponement of the tax. And in the 5th year, my tax is suddenly going up. Yes. Why that sudden going up? Because you enjoyed accelerated benefits for the first 4 years. So have I actually saved tax in the first 4 years? Answer is no. You did not save your tax. Instead, you have only postponed the payment of tax. So when I postpone something to the future, can I say that a liability is getting accumulated for the future?
Yes, sir.
Yes. And because I am postponing, can I call it as deferring also as an alternative word?
Yes, sir.
तो postpone का alternative is deferred. And because I'm going to pay in the future, it is a liability, it is an obligation. So therefore, what is happening is I'm deferring my tax liability to the 5th year by saving by a reduced payment of 12,000 per annum. So that is why we have to recognize this 12,000 per annum as a deferred tax liability for the first 4 years. 5th year में क्या करेंगे? 5th year में you reverse the deferred tax liability. Yes or no? 5th year, you reverse the deferred tax liability. So let us understand how the calculation will now look at. Okay, when I look at the deferred tax implications coming in place, 4 lakh profit, accounting depreciation 1,60,000. So profit before tax 2,40,000. Current tax expense is 60,000 for the first 4 years and 1,20,000 for the 5th year. Deferred tax expense. Can I say I have to book a deferred tax expense? Yes, because what is happening is my tax expense should have been 72,000, but actually it is only 60. So I still have a catch up of 12,000 to be done for each of the 4 years. So entry will be deferred tax expense account debit to deferred tax liability. So 12,000 I will create the expense for the first 4 years. And in the 5th year, what will happen? Asset is fully depreciated under accounting profit under the Companies Act. Asset is fully depreciated under Income Tax Act as well. So therefore, whatever is the accumulated deferred tax liability that was there, I am now discharging it entirely here. And therefore, I will reverse that DTL of 48,000. So therefore, the resulting net profit falls back to 1,68,000 per annum. Are we able to understand this? Yes.
Yes, sir.
Anybody? Any doubts? So what is your total tax expense? 60 plus 12, 72, 72, 72, 72. 1,20,000 minus 48 is again 72. Are we able to understand this?
Yes,
Yes.
sir.
Yes, sir.
Sure. Shabbir?
Yes, sir.
ठीक है. Okay, fine. Usha, all right. Good. Hemant, did you follow? Yeah, okay, fine. He has confirmed. Kishore, hope you understood. Now, that is the basis for introducing this standard. What I have to ensure my readers get the comfort is they should be able to correlate the taxable, I mean, the accounting profit versus the tax that you have, accounting profit versus the tax that you are accruing in the financial statements, the provision for tax that you are creating. Is it okay? ठीक है. So ये हो गया. This is the story for deferred tax creation. Okay. Now on similar lines, we have a deferred tax asset. We have a deferred tax asset working. TriStar obtained a bank loan from a scheduled bank, the interest on which amounted to rupees 40,000 per annum. As per 43B, interest on the bank loan will be deductible only when it is actually paid. Due to cash flow problems, the company could not pay the accrued interest for years 1 to 4. It settled all the interest dues in year 5. The borrowing also was repaid at the end of year 5. EBIT of the company for each of the years amounts to 4 lakhs. Assuming all other components forming part of EBIT are accounted identically for tax purposes as for financial accounts, show TriStar Limited's current tax expense, deferred tax expense, DTA or DTL, and the net profit after tax in the years for the years 1 to 5. Okay. So same question, only thing is, yahan pe the case is different. That is, it is now instead of depreciation, we are looking at a payment at an expense which is allowed only on payment basis. Okay. So we start off with, we start off with 4 lakhs. Yes, per annum. I'm referring to this. Okay. Now, finance cost is 40,000. Tell me, paid or unpaid? Should I account for it every year? Yes.
Yes, sir. Account for every year.
Obviously, you have to account for it every year because it is an expense that is getting accrued. It is an expense that's getting accrued and you have to account for it. So now, based on that, I have accounted 40,000 each year. Okay, now my profit before tax comes to 3,60,000. On this, tax at 30% would come to 1,08,000. So the net profit should be 2,52,000. This is what should be your ideal picture. But now what is happening? Am I getting a deduction of this? Answer is no. So year 1, it is 0. Year 2, it is 0. 3, 4, it is 0. In the 5th year, you are making the full payment. So 40,000 into 5, you are making the full payment of 2 lakhs in year 5. So therefore, your tax expense actually is 1,20,000 for the first 4 years and 60,000 for the 5th year. Okay. So now what happens is it appears that 1,08,000 minus 1,20,000, 12,000, 12,000, 12,000, 12,000. It appears we are paying extra. And suddenly in the 5th year, we are paying 48,000 less. But tell me one thing, is it really something that we are paying more today and less in the future? Or is it something that I am prepaying today to save in the future?
Prepaying, sir.
यू आर प्री पेइंग दिस टुडे। आप आज ज्यादा पे कर रहे हो क्योंकि आगे चल के आपका पेमेंट कम होगा। So that is giving rise to something which you are saving in the future. A cash flow which is saved is also an inflow. A cash outflow saved is an inflow, so it becomes an asset. Because I am getting it in the future, we call it as deferred. So deferred tax asset. So I will be recognizing a DTA for the first 4 years, which I am going to reverse in the fifth year. Okay. So what will be my entry for the first 4 years? Entry will be deferred tax asset account debit to deferred tax expense, 12,000 per annum. Okay. And in the fifth year, what will happen is this cumulative 48,000 you are going to reverse. Deferred tax expense account debit to deferred tax asset. So you can see what will happen by virtue of introducing this deferred tax. 3,60,000 profit before tax, current tax expense 1,20,000 for the first 4 years and 60 in the fifth year, and deferred tax of -12 for the first four and 48,000 for the fifth year. So 1,20,000 minus 12, you will be having 1,08,000 for the first 4 years. And in the fifth year, it will be 60 plus 48. So again, 1,08,000. समझ में आ गया अपने को? Yes. Anybody has any doubt so far? Monica?
No, sorry.
All clear. Okay. ठीक है. Karthik confirm. Pooja, hope you understood. Stephen, Jeannie, Nisha, Niranjan, Mamta, all
Yes.
clear.
In the this calculation in the first step, why we take zero for
कहाँ
in
पे? यहाँ पे?
finance cost accumulation?
ये करंट टैक्स के लिए है.
Yes, sir.
Because what they are saying is, उन्होंने क्या कहा है? Interest will be deductible for tax purposes only when it is actually paid, and they have not paid the interest for the first 4 years. So when they have not paid interest, it will not be allowed as a tax expense.
Okay,
So
sir. Okay.
that is why first 4 years it is zero. Fifth year they are paying for all the 5 years. So 40,000 into 5, 2 lakh rupees. Okay.
तो सर जब टैक्स कैलकुलेशन हम कर रहे हैं तो हम टैक्स भी इसके अकॉर्डिंग पे करेंगे, है ना?
जी बिल्कुल. तो दैट इज वाई आपका टैक्स एक्सपेंस 1,20,000 है ना. See, that is why I am paying a tax of 1,20,000 for the first 4 years.
यस सर, क्लियर सर, क्लियर.
कंप्यूटेशन के हिसाब से हम 1,20,000 ही पे करेंगे. ओके.
ओके सर.
ऑल राइट.
यस
यस.
सर.
आर यू कन्विंस्ड?
यस सर.
ओके. ठीक है.
थैंक यू सर.
So this is what is deferred tax liability, deferred tax asset, basic concepts. Okay. This is something you would have studied in AS22 also. Okay. This is something you would have studied there as well. So now with this background, let us come to the theory. Okay. So these two questions are done. So now let us come to the definitions that we are having. Okay. So what is your accounting profit or loss? It is the profit or loss for a period before deducting tax expense. So that is basically your profit before tax. That is your profit before tax. Okay. Now, there is a definition of taxable profit or loss. It is the profit or loss for the period determined in accordance with the applicable tax rules. That means I start with accounting profit. I will add certain expenses which are non-deductible for tax purposes. Example, that interest we saw na 43B. We will be paying, it will be allowed only when actually paid. So that could be one. Incomes not recognized but included under tax laws. For example, revenue that is taxed on a receipt basis. In my balance sheet, it is sitting as advance from customers. But in my tax law, since I got the money, I have to recognize the income. Less expenses not recognized but deductible for tax purposes. Example could be your accelerated depreciation. Less income recognized but not under the tax laws. Example, income accrued but taxed on a cash basis. So this gives rise to a taxable profit or loss. Okay. Now let me be very clear. When we talk about Ind AS 12, it only talks about accounting for taxes on income. So you may find certain questions, certain examples, which will strictly not be in line with the Income Tax Act 1961. Okay. In spite of that, please follow what the question has said. What is the source of Ind AS 12? IAS 12. IAS 12 is an international standard. So what these standards do is they give the principles for accounting. They are not tailor-made for the Indian tax regulations or the British tax regulations or the Sri Lankan tax regulations, etc., etc. They are applicable. They are applicable only for. They are applicable only. This standard is applicable only for the principles of accounting. Okay, so don't get confused if they give any tax related adjustment by saying, sir, this is not possible under the Income Tax Act. यहाँ पे बात Income Tax Act की नहीं हो रही है. Okay, it is something different altogether. Are we okay with that? Yes. So don't get confused. Okay, take the principles from here. Take the principles from here, apply it to your real life scenarios. Tomorrow, what will happen? Suppose you people, why suppose you people will qualify. After qualifying, let us suppose you got a job in London. So you guys are sitting in London, working there. Now, you do not know the London Income Tax Act, but can you do the accounting for income taxes if you know these provisions? Answer is yes, you can do that. And therefore, those principles are what are discussed here, not the Income Tax Act. Principles remain the same everywhere. Okay. All right. Next. So my tax expense is a combination of two items, current tax expense and deferred tax expense, something which we have already seen. Current tax expense plus deferred tax expense, 1,08,000 for the second example, and it was 72,000 for each of the 5 years in the first case. So therefore, these two items put together make up your tax expense. Make up your tax expense. Rare cases, it could be negative, in which case it becomes a tax income. Are we able to follow? Yes. This is something we have already seen. Okay. Now, what is the meaning of current tax? It is the amount of income taxes payable or recoverable in respect of taxable profit or tax loss for a period. In all these examples, both these examples that we saw, the current tax, how did I calculate? As per the tax laws. As per the tax laws. So taxable income was given, depreciation under the Income Tax Act was given, and on that resulting profit, I have computed the tax. In the second case, I have started with the profit and not given interest deduction because it was unpaid. It got paid in the fifth year. That is why you are having the current tax expense going down in the fifth year. Are we able to follow? Yes. So amount of income tax is payable in respect of the taxable profit or tax loss for that particular period. So that is nothing but taxable profit or loss multiplied by the tax rate. Multiplied by the tax rate. Okay. So what will be the journal entry? Debit the P&L, and credit provision for tax. Credit provision for tax. Acha. How do I present this provision for tax? In your balance sheet, it will come under short-term provisions. But typically, if you can offset this provision against income tax assets, just say you have your advance tax, you have your TDS for the same financial year. If they are also present on the asset side, then you can do a net setting. You can do a net setting. Okay. Can be offset in balance sheet against current tax assets if there is a legally enforceable right to set off the amounts and entity intends to settle on net basis or realize and settle simultaneously. Okay. Measured at amounts expected to be paid to tax authorities using enacted or substantially enacted rates. Okay. So that takes care of current tax in totality. Any doubts so far? Any doubts? Clear. Okay. Acha. What is that statement? What is that statement which marries my accounting profit to that current tax expense? I have accounting profit. I have tax expense. Basically, current tax. What is that statement which gives this marriage between the tax expense and the accounting profit? This is nothing but your statement of computation of income. Yes, because you start with statement of computation of income. You start with accounting profit. Then you arrive at taxable profit, and on that you apply the tax rate to arrive at the tax assets, to arrive at the tax expense. Is it okay? So therefore, your statement of computation of income becomes one of the major documents that will help you to identify deferred tax assets, deferred tax liabilities, as well as that statement is going to help you identify what will be the current tax expense. Is it okay? Yes. All right. I have a query from Hemant. See, when we say realized tax assets, I mean that ultimately, when you pay your income tax for the year, it is after adjusting advance tax and TDS, right? So I will not realize it, but I'm offsetting it against my provision and paying the net amount. So that is the meaning of realizing. Okay, that is the meaning of realizing. Okay, so that is done. All right. So now there is one very big question that is there. Okay.
Sir,
हाँ बताइए ना.
sir, come back to last slide.
कौन सा वाला? ये वाला?
No, sir. Yes, sir.
हम्म.
Sir, here is point star offsetting in the separate financial statement versus consolidated financial statement.
ये वाला.
Yes, sir.
Okay. Now, when I talk about offsetting, okay, so this, whatever I discussed, was offsetting within the financial statements of the same entity. So suppose I have A Limited. A Limited has its own tax assets. A Limited has its own tax liabilities. You can do an offsetting and present it net if you intend to do so. Now, when I talk about consolidated financial statements, suppose I have A Limited, I have its subsidiary B Limited, C Limited. B Limited, C Limited have their own tax assets, their own tax expense, and I have my own tax assets and tax expense. Can I, if there is any surplus payment by the parent, which is giving rise to a refund, can I use that refund to meet the liability of B Limited? Did you follow?
Yes, sir.
Suppose I have A Limited. A Limited has advance tax paid. And A Limited has a subsidiary, B Limited, which has a tax liability. My question to you is, can I use this advance tax to meet this tax liability? Monica?
Sir, I'm not confirming that answer. That's why I'm speechless.
आपको क्या लगता है? आप you are aware of the regime right now in India, right? आप कर सकते हो ऐसे?
Sir, I think no,
I
not
think no
allowed.
नहीं, आप नहीं कर सकते
Not
ऐसे,
allowed. Yes,
right?
sir.
Not
Yes, sir.
allowed. So
Hmm.
when I am preparing A Limited's consolidated financials, I will show advance tax also separately, and I
Yes,
will
sir.
show B Limited's provision for tax also separately.
Yes,
But
sir. Both
again, I
entities
told
are
you,
different.
but
Hmm.
again I told you, इसका source कहाँ से है? Ind AS 12 source is what? Source is IAS 12. There are certain countries which allow offsetting of taxes of one entity against the liabilities of another entity, and they do the assessments on a group basis. So when they do this assessment on a group basis, at that point of time, this net setting is permitted, which is why I just gave this. But anyways, it's good that you saw it. Offsetting in separate financials versus consolidated financials is something that cannot exist under the Indian scenarios, because in Indian scenarios, each entity is assessed separately by the tax department.
Yes, sir.
तो हम उसका नेट सेटिंग या ऑफ सेटिंग नहीं कर सकेंगे.
Yes, sir.
Same entity, I can do the net setting because that's how I do the payment, right?
Yes, sir.
ठीक है? But there are certain countries where if the parent pays the tax, subsidiary has a liability, I can do the offsetting. In that case, I will do the net setting and present the net figure in the consolidated financial statements. Any
Okay,
doubts?
sir. No, sir.
No doubts. ठीक है. So now there is this one huge question which is there. ठीक है. I don't mind doing it, but you know what is the outcome of this question? Let me tell you what is this question about. Okay. See, I am given the profit and loss extract. I am given the balance sheet. Okay. And I am given certain adjustments. Okay. Now, what are these adjustments? These adjustments are nothing but tax treatments of certain items. Okay. These adjustments are nothing but tax treatments of certain items. So what will happen is, I will explain to you. You will have net profit as per books, 59,50,000. Then whatever additions are there under the tax laws, whatever deductions are there under the tax laws to arrive at the taxable profit, on that the current income tax. So basically this question, एक तो ये क्वेश्चन आना बहुत ही मुश्किल है, because this is more like making you familiar with what is your current tax expense. Is it okay? So my suggestion, try to do this for homework. Try to do this for homework, because if I start doing, I will only explain to you each and every clause. Iska kya karna hai, uska kya karna hai. There is no value add in terms of accounting or reporting that I will be giving you if I do this question. Can you try this for homework? Yes?
Yes, sir.
याद से करो. लास्ट टाइम जो होमवर्क छूटा था वो किया आपने, इंड एस 21 वाला?
Yes, sir.
ओके. तो प्लीज डू दिस. जीनी, प्लीज ट्राई दिस. निशा, ओके.
Yes, sir.
शब्बीर, उषा, प्लीज ट्राई दिस आउट. ओके. बहुत
sir.
सिंपल है. ओके. This is only to make you understand that how do I compute my tax, which is something you already have a dedicated subject for. Okay, उसमें बहुत है. So I don't have to add to your load for the tax computations. कर लेना, simple सा question है. Okay, so that takes care of this question. Ultimately, the end result of this is what your accounting profit is 59,50,000. Your taxable income is 93,80,000. So current income tax, 30% of this is 28,14,000. So debit will be profit or loss account debit to income tax liability or provision for income tax 28,14,000. That's it. Nothing else is there in this. Okay. So now let us continue our theories. Okay, we did questions 2 and 3 where we saw the concept of deferred tax, Now, when I talk about your deferred tax, the amount of income taxes payable or recoverable in future in respect of temporary differences, unused tax losses, and unused tax credits. That is the meaning of deferred tax. Achha. Now, lot of technical jargon which is there. But let me tell you, it's not so technical. Temporary differences. You come to those two questions that we did. This depreciation, 1,60,000 versus 2 lakhs, giving rise to a 40,000 rupees difference. Is this difference temporary or is it permanent?
Temporary.
Temporary. कैसे पता आपको temporary है?
Because in coming year, it will be set off against that liability, tax liability.
Is everybody convinced on this understanding? See, ये
Yes,
जो
sir.
40,000 difference है, ultimately it is getting adjusted in year 5. Yes? Pooja, Jeannie, are you able to follow?
Yes, sir,
Shabir,
confirmed.
Yes,
Hemant,
sir.
did you follow? Yes. So this is a temporary difference that is arising out of this. Okay. Why do we call it as a temporary difference? Because in the future, the difference gets eliminated. The difference gets knocked off. The difference gets adjusted. The difference gets set off. The difference becomes zero. And therefore, because of this difference, today I am having a higher tax. Future, I will have a lower tax, or vice versa. Today, I will have a lower tax. In the future, I will have a higher tax. So, in respect of these temporary differences, the amount of income tax is payable. So, this becomes a liability. The amount of income tax is recoverable. This becomes an asset. In the first case, my tax should have been 72,000. It was 60,000. So payable is 12,000 for year 1, year 2, 12, year 3, 12, year 4, 12, and that is getting adjusted in year 5. Whereas in the second case that we saw of that interest, it gave rise to 12,000 saving in year 1, higher tax in year 1, 2, 3, and 4, and a saving in year 5 of 48,000. So therefore, these are the amounts of income taxes payable or recoverable in respect of temporary differences, unused tax losses, and unused tax credits. So we come to unused tax losses and unused tax credits. What are they? We will see at the appropriate time. But are you comfortable with deferred tax meaning? Yes?
Yes, sir. Yes, sir.
Okay, good. So now,
Sir.
yes, all right, fine. So Pallavi, hope you are able to follow. Okay, all right, fine. Okay. So now let us continue. These two questions we did. Okay, fine. Now the standard has prescribed a particular mechanism for calculation of temporary differences. Okay. The temporary differences, what the standard says is, it is the difference between the carrying amount and the tax base. It is the difference between the carrying amount and the tax base. Okay. So now let us try to understand what does this mean. Okay. See, we did these two examples, right? Question 2 हमने किया. Question 3 also we did, right? Tell me, I started off with the profit. Yes. My whole process started with profit and I found out my net result. Are you able to understand? कहीं पर भी, have you seen me talk about closing balance of assets under the tax laws? Closing balance of asset under the accounting law, under the accounting regime? Answer is no. I only moved on a profit, what you can say, on a P&L basis. I spoke about depreciation under the Companies Act when I was doing this question. I spoke about depreciation under the tax laws. I correlated with the accounting profit and did the workings. So we call this as the P&L approach. We call this as the P&L approach. Are you able to understand? Yes?
Yes, sir.
P&L approach was there under AS 22. P&L approach was there under AS 22. Unfortunately, it is not there in the Ind AS regime. When I say unfortunately, I mean that what we saw just now is not the way you will solve when you do your workings under Ind AS 12. What we have just now seen was just to make you aware of the deferred tax, which is why I took you through this. But we cannot apply the P&L approach because the standard says you have to follow something known as a balance sheet approach. You have to follow something known as a balance sheet approach. So now let us see what do they mean by balance sheet approach. Okay. So all clear so far? So now something new is coming up. Okay. I'm doing the same second question. I'll come to that. What is the reason for this new approach? I will explain to you. Okay. Now I'm doing the same question, but only thing is now I will not talk about depreciation. I will not talk about depreciation explicitly. It will be there in my workings, but ultimately it is the balance sheet items which will be utilized for the purposes of making my tax workings. Okay, so let us try to understand. Everything is the same. Okay, there is no change in the facts, absolutely no change in the figures. Okay, so you should be aware of the figures by now. Okay. Now let us look at calculation of deferred tax. What is deferred tax? Deferred tax is nothing but the difference between the carrying amount and the tax base. The difference between the carrying amount and the tax base. What do you mean by carrying amount? Your book value for the purposes of accounting. So book value for the purposes of accounting is 8 lakh minus yearly depreciation is 1 lakh 60. So 640, 480, 320, 1 lakh 60 and 0. Are you able to understand this?
Yes, sir.
Yes, sir.
Book value और carrying amount समझ में आ गया अपने को? Yes.
sir.
All right. The next step that we calculate is known as the tax base. The next step that we calculate is known as the tax base. What is your tax base? Simple words में बोलूं तो tax base is the value attributable to the asset or liability for tax purposes. What was carrying amount? It is nothing but the value attributed to an asset or a liability for accounting purposes. tax basis value attributable to asset or liability for tax purposes. So for tax purposes, my opening value of asset is 8 lakhs. Do you agree?
Yes,
Yes.
sir.
But because of depreciation of 2 lakhs for 4 years, the tax base is 6 lakh, 4 lakh, 2 lakh and 0 and 0 for years 4 and 5. Are you okay till now?
Yes, sir.
Yes, sir.
यहां तक किसी को कोई दिक्कत है तो प्लीज बताओ. Yes?
Clear है sir.
Clear है. Okay. Pallavi, hope you also understood.
Yes,
Yes?
sir.
Fine. ठीक है. Now, compare the closing carrying amount and the closing tax base. That gives rise to a temporary
difference.
difference. That gives rise to a temporary difference. Okay? 40, 80, 1 lakh 20 and 1 lakh 60,000. This is your temporary difference that is there. This temporary difference is cumulative. It is cumulative because a closing balance है ना. So closing balances are cumulative. Previous periods का भी impact है इसमें. So this is cumulative. So your temporary difference has increased from 40 to 80, 80 to 120, 120 to 1 lakh 60. And in year 5, it becomes 0. In year 5, it becomes 0. Now, closing deferred tax. For the time being, let us forget liability. Closing deferred tax will be nothing but temporary difference into tax rate. So 12,000, 24,000, 36,000, 48,000 and 0. Is it okay till now?
Yes, sir.
Is it okay? All right.
Yes.
Now, let us understand why do I say that it is a deferred tax liability? Why it is a deferred tax liability? Okay. And this is something which is very important. If you get this reasoning right, you have sailed through 80% of the topic. If you don't get this reasoning right, there is a very simple rule. Once you know that rule, then also you will be through 80% of the topic. But I don't want to explain the rule to you because that will become by heart. मैं rule भी बताऊंगा at the appropriate time. But for now, try to understand the reasoning. Okay. I have an asset worth 6 lakh 40,000 rupees book value at the end of year 1. Correct? Yes. Now, the same asset has a value of 6 lakh
6 lakhs.
for tax purposes. Correct? यहाँ तक clear है? Let me write it on the notes. Okay. Accounting
Profit
tax.
accounting tax.
Okay.
Hmm.
Value
6
of
lakh 40,000.
asset 6 lakh
40,000.
and here it is 6 lakhs.
60.
Now, just a minute. ध्यान से सुनो. This asset will be used to generate income. This asset will be used to generate income. Yes? बोलो
Yes.
यार. This asset will be
Yes,
used
sir.
to generate income.
Yes, yes.
That income is taxable income.
Yes.
That
Yes.
income is taxable income. Now, that income, against that income, the asset will get depreciated. Yes or no? Against that
Yes.
income, the asset will get depreciated. So therefore, in accounting language, I have an asset worth 6,40,000 to be depreciated in the future. Agreed?
Yes, sir.
But for tax purposes, I have an asset worth only 6 lakhs to be depreciated in the future. That means my tax profits in the future will be higher by 40,000 because the available asset for depreciation is only 6 lakhs, which is 40,000 less than the accounting profit. Are we able
Yes,
to
sir.
understand?
Yes.
Monica, are you able to follow?
Yes, sir.
Jeannie,
Yes, sir, clear.
Karthik, Hemant, yes? All right. ये हो गया year 1. Year 2, again it is accumulative. Okay, year 2 में क्या हो रहा है? What is the value of the asset? 4,80,000 versus 4 lakhs. 4,80,000 versus 4 lakhs. Year 2, again I will use this asset. Against this asset, I will get some income. This income, against that, for accounting purposes, I have an asset that can depreciate, that I can depreciate to the extent of 4,80,000. So in the future, my accounting profit will fall down by 4,80,000, but my tax profits will fall down only by 4 lakhs. So therefore, my profits for tax purposes will be higher by 80,000 in the future. Yes or no? And therefore, DTL, because in the future, your tax profits are increasing because of this. Are you able to follow?
Yes, sir.
Year 3, 3,20,000, 3,20,000 and 2 lakhs. I am again using this asset, but against this asset, I will have a taxable value of the asset 2 lakhs that I can write off, that I can expense out against an accounting value of 3,20,000. So 1,20,000 will be your higher profits that you will accumulate in the future. So this becomes a DTL. Year 4, 3,20,000 falls down to 1,60,000. And this becomes 0. You still have an asset and you are using it to generate income. But your income tax purposes, this asset is now fully depreciated. So therefore, nothing is allowable in the future. So this becomes a DTL. In year 5, the status quo comes. Okay? The status quo comes. Are we able to understand this? यहाँ तक सबको समझ में आ गया?
Yes, sir.
Yes, sir.
Yes. So did you understand why it is giving rise to a deferred tax liability?
Yes, sir.
Yes. Perfect. All right. Now, so therefore, 40, 80, 120, 160 is your temporary difference. And at 30%, it gives rise to a cumulative deferred tax liability. A cumulative deferred tax liability. When I adjust the opening liability, the deferred tax expense for the year comes to 12, 12, 12, 12 and minus 48 where there is a reversal. Are you okay with this?
Yes, sir.
Is it exactly the same like the accounting profit approach? Yes. यहाँ भी देखो 12, 12, 12, 12 and reversal of 48,000. Is it okay?
Yes.
Yes. Is it okay? All right. 1 second. Okay, yes. So therefore, I am looking at this situation from a balance sheet perspective and arriving at the same conclusion. Any doubts so far?
No, sir.
No doubts?
Hmm.
Absolutely no doubts? Yes? No. Why did the standard setters move from a P&L based approach to a balance sheet based approach? जरूरत क्या थी ये सब करने की, right? P&L also gave me the same results. Balance sheet also gave me the same results. Then what was the need to do this? The P&L approach had certain limitations. कैसे limitations? Suppose that you impaired an asset in line with Ind AS 36. Impairment किया आपने. Is
Hmm.
impairment allowed under tax laws?
No.
No.
No,
No.
it's not allowed under tax laws. So therefore, you would be adding it back in your computation.
Hmm.
You would add it back in your computation of income because it is reducing your profits. You would add it back. The impairment charge, would it be a permanent difference or a temporary difference in line with AS 22?
Permanent
Permanent
difference.
difference because it had no allowance under the Income Tax Act. But
Hmm.
by virtue of impairment, your future depreciation is getting affected.
Yes, sir.
Yes or no?
Yes.
Your future depreciation is getting affected. End mein what is happening? What is the end outcome of all this? Your asset will be fully depreciated. आप चाहे इम्पेयर करके डेप्रिशिएट करो या डायरेक्टली डेप्रिशिएट करो, whatever you do, whether you first impair and depreciate, revalue and depreciate, do whatever you want, ultimately the final outcome of this asset is that it will be fully depreciated.
Yes.
Yes or
Yes,
no?
sir. Yes, sir.
So
Yes.
when this asset is fully going to be depreciated, why do I have to break my head on whether impairment is allowable under income tax? The reduced depreciation, all of that carries no meaning. I just look at the closing balances and come to my determination of whether it gives rise to a deferred tax liability or a deferred tax asset. Is it okay? Yes.
Yes, sir.
Monica, Pallavi, Pooja, Jeannie, Nisha, Hemant, Kishore.
Yes, sir.
Yes,
Yes.
not clear. What is not clear, Hemant? Hemant, you mentioned, okay, now clear. Okay, fine. Perfect. So this was the case of the asset. This was the case of the asset that we saw. So now, when I look at my workings, it gives rise to a deferred tax liability. Now, we take the other example that we saw. Sir, which example? That interest unpaid. Yes, you remember that example, 40,000 each year. I don't pay it off. Okay. So accounting and tax. Value of liability. Year 1, 2, 3, 4, 5. Okay. Now, accounting purposes, have I accrued the interest expense of 40,000 in year 1?
Yes, sir, you have.
I am talking about this question which we just now did, right? 40,000 per annum is your interest expense, and this interest expense is getting allowed in the 5th year for tax purposes because the payment has happened in the 5th year. So therefore, year 1, I have accrued 40,000 rupees. Any doubts here?
No, sir.
No doubts. Tax purposes, will I account this expense for tax purposes?
No.
You will not account this because you have not paid for it. Okay? Because you have not paid for it. Year 2, another 40,000 you will accrue.
Yes, sir.
So 80,000. Yes, another 40,000 you accrued, but tax you did not pay, so you have not accounted for it. Year 3, another 40,000 accrued, so your increased interest is 1,20,000, but tax you have unpaid. Year 4, 1,60,000, but unpaid in year 4. So you would not have taken it in the tax workings. Year 5, you have accrued another 40,000 and paid the full amount. Yes, you would have accrued another 40,000 and paid the full amount. And in tax also, you would have accounted 2 lakhs and paid 2 lakhs. Are you able to follow this?
Yes, sir.
Now, understand. Now let us understand the reasoning for this. Why it becomes a deferred tax asset. This is very simple to understand. This is little difficult. Okay. I mean little technical. See, the entity has already earned some profits. Yes. Against that profit, am I claiming any expense today? Answer is no. But can I claim this difference of 40,000 in the future? Bolo yaar. See, suppose I have earned a profit of 4 lakhs. Can I claim this 40,000 today? Answer is no. Can I claim it in the future when the interest is paid?
Yes, sir.
Yes, sir.
Answer
Yes,
is
sir.
no. That is why this gives rise to a deferred tax asset. This difference is claimable in the future. This difference is claimable in the future. So this is why this ends up becoming a deferred tax asset. Are we okay with this?
Yes, sir.
And this is a cumulative value of the asset. Okay. Now, when I say DTA, okay, there is one step which I skipped. Okay. This difference, what you are seeing, one moment, just a second. Okay. This difference of 40, 80, 120, 160, what did I use the term? We can claim this difference in the future. Yes or no?
Yes, sir.
So the standard calls this as a deductible temporary
Deductible
difference.
temporary difference.
Okay. This deductible temporary difference, when I multiply with the tax rate, it becomes my deferred tax asset. Are we okay with this?
Yes, sir.
And here, if I call it as a deductible temporary difference, डिडक्टिबल का ऑपोजिट क्या होगा? टैक्सेबल
Temporary
टेम्पररी
difference.
difference. This, when I multiply with the tax rate, it gives rise to a deferred tax liability. Are we able to understand?
Yes, sir.
Yes, sure.
Yes.
Now, let me just check if somewhere we have. Okay. See, the definition of tax base for an asset for a liability is not simple to understand. Okay. In fact, if you go by the traditional way कि हम book से definition पढ़ेंगे and समझेंगे, it becomes very technical. So let us now try to understand. I think I have covered the major part of understanding this, what I have explained here. Now I'm moving to the language in the standard. You may find it a little technical, but I'll try to correlate to what we have already done here. Okay. So now, when I have to calculate my deferred tax, what are the steps involved? It is a 10-step mechanism. It is a
Yes.
10-step mechanism. The first one is compute the carrying amount of assets and liabilities. Step 2 is compute the tax base. Step 3, compute temporary differences. Step 4, classify these into taxable temporary difference or deductible temporary difference. Step 5, there are some exceptions, identify that exceptions. Step 6, assess deductible temporary differences, tax losses and credits. Step 7, determine the tax rate, calculate and recognize deferred tax, accounting for deferred tax, and offsetting DTA and DTL and comply with other requirements of the Ind AS. Total 10 steps है. Steps बड़े बड़े लग रहे हैं, but if you see, basically your job is all of these will happen in one calculation. Carrying amount, tax base, temporary difference. Step 3 is nothing but step 1 minus step 2. So it just feels big. Step 4, identify whether it is deductible or taxable. Exceptions dekh lo. Step 6 is critical from a judgment perspective. Step 7, kaun sa tax rate use karoge? Multiply with the tax rate and the difference to arrive at deferred tax. How to account, and finally offsetting and other requirements of Ind AS. So steps bade lag rahe, but it's quite simple actually. Okay. Now, what is the carrying amount of the asset? Saral bhasha mein, in simple
Accounting.
layman's terms, it is the ledger balance. जो आपके ट्रायल बैलेंस में जो बैलेंस attributable to that asset or liability, that is your carrying amount. See, I don't pride myself on understanding technical language, but make things simple to understand. This is technical. Amount at which an asset or liability is recognized in the balance sheet after making necessary adjustments like depreciation, impairment, etc. ये सारी चीज करने के बाद ही आपका GL बैलेंस आता है ना. So whatever is there in your GL balance, that becomes your carrying amount. Any doubt so far?
No, sir.
No. Okay. Now we come to the tax base. Now, why did I do this particular example first before I came to this definition is because if I did this first, you would not be able to correlate. Abhi easily you will be able to correlate. What is the tax base of an asset or liability? Again, I'm telling you, in examination or even in practical life, at least this method has worked for me. I remember only this. It is the amount attributed to an asset or liability for tax purposes. Don't go into this technicality. I'll explain you the technicality right now. Problem is, when I apply this for everything, it becomes difficult for me to really understand in a limited span of time. In your examination, your time span is very limited. You don't have time to sit analyzing this. Okay, this is very clear. ये तो बहुत ही simple है. Okay, so now if I look at the tax base of an asset, how the standard defines it is, if the economic benefits flowing from the asset are taxable, then tax base is equal to the amount deductible for tax purposes against any taxable economic benefits that will flow to an entity when it recovers the carrying amount of the asset. Simple language. I told you in the beginning, I have this asset which is going to give me accounting profit. Against that accounting profit, how much of depreciation I can claim for tax purposes? How much it was? 6 lakh rupees. Yes or no? Hello?
Yes, sir.
तो बात तो वही हुई. Yes. 6 lakh you can claim in the future. 4 lakh you can claim in the future. 2 lakhs you can claim in the future. It's exactly the same. Jeannie, did you follow? Nisha, did you follow? Mamta,
Yes, sir.
Shabbir,
Yes, sir.
or Pooja?
Yes, sir.
Okay. So now, when the economic benefits flowing from the asset are taxable, the tax base would be the amount deductible for tax purposes against any taxable economic benefits that will flow to an entity when it recovers the carrying amount of the asset. Is this easy to remember, or cost of asset 8 lakhs minus tax depreciation 2 lakhs. So for tax purposes, amount attributed is 6 lakhs. What is easy for us to remember? Is this easy or is this easy?
Second one.
Please
Second
follow
one, sir.
this one. Ultimately, it is amount attributable to an asset or liability for tax purposes. That's it. So for tax purposes, amount attributed to this asset at the end of year 1 is 6 lakh rupees. So 6 lakh is your tax base. No doubt. So what will be your thought processes? Let us presume that there are two different sets of books. One is for Ind AS, one is for taxation. You think as if you are passing journal entries in the tax records also. You think you are passing journal entries in the tax books also. Automatically, your problem of tax base gets resolved. Automatically, your problem for tax base gets resolved. Are we okay with this? Yes? Okay. Okay. Now, let us look at tax base of a liability. This is exception. We'll look at this later. Okay, both of them. Okay. Liability. Tax base of a liability is defined as the carrying amount of the liability less any amount deductible for tax purposes in respect of that liability in future periods, if any. Yes? So liability का definition सीधा नहीं है. Liabilities definition is carrying amount minus amount deductible for tax purposes in respect of that liability in the future periods. Accounting of the liability. 40,000. Is the screen visible? Yeah, it's visible. Okay. 40, 80, 1 lakh 20, 1 lakh 60 and 2 lakh minus 2 lakhs. Tax base is 0. So what is the tax base of a liability? Think what I told you. The entity must have earned some profits. Against that profits, in the future, it can claim an expense of 40,000 minus 0. Are you able to follow? Yes? Hello?
Yes, sir.
Yes, sir.
Yes, sir.
So therefore, liability is nothing but carrying amount of the liability, which was 40,000 in the first year, minus amount deductible for tax purposes in respect of that liability in future periods. In the future, I can claim a further deduction of 40,000 when this is actually paid. Yes or no?
Yes.
Yes, sir.
So therefore, the tax base is 0. See, how the standard is worded is, it starts with accounting base, talks about availability of a deduction to give you the tax base. How did we approach it? I am in my tax records. Is this expense deductible on accrual basis? Answer is no. And therefore, will I pass any entry in my tax books for this? Will I accrue this expense? Answer is no, you will not. So therefore, it is directly taken as 0. In the second year, I have an accounting accrual of 80,000. Entire 80,000 is deductible if it is paid. But did I pay it? Answer is no. Because I did not pay it, I will not pass any entry in my tax books. But how the standard is worded, it will be 80,000 minus amount deductible in the future. So that becomes 0. Are we able to understand this? Yes?
Yes, sir.
Sure. Jeannie, Monica,
Yes, sir.
Yes, sir.
Pallavi,
Yes, sir.
Shabbir, Usha, Nisha, Mamta, Hemant, all clear. Okay, fine. Great.
त्याच्यात जगमध्ये.
क्या
Sir,
कह Yes, Shabbir, tell me.
so why are we accumulating in carrying amount 40 plus 80? We have to book only 40 each year, na sir?
That's what. So cumulative हो रहा है ना बेटा. This is the closing balance.
Okay.
आप year 1 में 40 करोगे, it's unpaid. Year 2 में another 40,000 करोगे, so balance हो गया 80. Then another 40, so balance हो गया 120. So
Sir,
with
DTA,
what happened, Shabbir?
sir, DTA will be 40,000 into tax rate, na? For each year.
That will be the charge in the P&L for each rate, for each year. But closing DTA will be 80,000 into tax rate. Closing
Okay.
DTA will be 1,20,000 into tax rate. The difference will be, suppose tax rate is 30%, 24,000, and this will be 36,000. So iska difference of 12,000 is the entry that will come in the P&L. And this is nothing but 40,000 into 30%, which is what you are telling. Yes?
Okay. Got it.
But मैं 40,000 नहीं करूंगा because then that would amount to P&L approach. Did you follow?
Okay. Okay.
Yes. So in the whole point behind the balance sheet approach is, when I talk about the balance sheet, I don't get the yearly charge directly. I get the closing balance of the deferred tax asset or liability. Okay. I get the closing balance. Okay. So here, this is the closing DTA liability. When I reduce the opening, my current year's charge or reversal is what is going to be visible. Did you follow?
Yes, sir.
Perfect. So that takes care of definition of tax base. Any doubts in definition of tax base? Yes. Anybody has any doubts? Mamta, समझ में आ गया? No doubt. Okay. All right. Okay. Fine. ठीक है. When I talk about an asset which gives certain benefits which are non-taxable, then the tax base will be the carrying amount of the asset. Why that will be, we will see when we do some questions. Okay. And when I have received certain revenue in advance, tax base will be the carrying amount less any revenue that will not be taxable in the future periods. Okay. See, revenue received in advance. Suppose you are maintaining your tax books. Suppose you are maintaining your tax books and you got money in advance. Will you pass an accounting? Will you pass an entry for that? Assuming you are in the tax records. Will you pass an entry for it?
No.
Yes. आपके बैंक में पैसे आ रहे हैं ना मैडम? Money is coming into your bank account. Think it of like, see,
No, I
that's why I'm
meant in the
saying.
sense that it will not be part of your taxable income. That's what I meant.
Okay, so that depends, but my only point is whenever you have to identify tax base and carrying amount, always go under the impression that I'm maintaining two sets of books and then I will have to pass the journal entries. So when revenue is received in advance, accounting, though I will definitely pass the entry bank account debit to advance from customer. Advance from customer. Tax base also, in the tax books also, money has come in the bank. So I cannot avoid this. To advance from customer. Is it okay? So I cannot avoid this. So if you look at this, the tax base of the resulting liability is its carrying amount, minus any revenue that will not be taxable in the future periods. This is the exception that you are looking at. Okay. Non-taxable tax base equals carrying amount of the asset. These two exceptions are there. That's it. So shall we proceed further? Yes.
Sir, 10 minutes break.
अरे आप इतनी जल्दी?
सर
Sir,
बहुत सर डोज ओवर हो गया आज का.
Everybody needs a break for 10 minutes. Yes, we take a break for 10 minutes. Okay, we shall resume at 8:40. Okay, 8:40, 8:45.
Okay, sir.
Okay, ठीक है. Okay. All right. So you got a pretty long break. Okay. So I hope it's all clear. So let's continue. All right. Now let us look at some questions that are there on computing the tax base. Okay. On computing the tax base. Example 4. Okay. Fine. So now, see, the next set of questions, what we are trying to do is to understand what is going to be my tax base. Okay. This is the major part. And then I told you that I will run you through a rule, which is basically going to help you identify whether the item of tax that I have to book, is it a DTA or a DTL? We will see one small basic premise, and then we shall understand that and then proceed forward. Okay. So entity A had acquired an asset, that is plant and machinery, for rupees 1 lakh on 1st April 20x1. It depreciated this item at 10% on SLM basis. As per tax laws, this item has to be depreciated at 30% per annum on WDV basis. So tell me, what will be your tax base for this? Come on.
Liability, sir?
How much? Nisha, I did not get your answer. I was not able to get the words.
No, I
70,000.
said it
70,000.
70,000.
70,000.
Yes. Because 1 lakh
Minus
minus
30%.
30,000. So your tax base is 70,000. Okay. The tax base of this item is rupees 70,000. Okay.
70,000.
Now, additionally, what they have added, if A decides to revalue the item of plant and machinery, the carrying value will be 150, but for tax purposes, revaluation would be ignored. And hence the tax base remains at 70,000. The tax base remains at 70,000. Okay. So next, entity A has an inventory with carrying amount of 1 lakh at the reporting date. It recovers the value of inventory through sale in a subsequent reporting period. So tell me, what will be your tax base?
1 lakh.
1 lakh. Monica, you following?
Yes, sir.
Jeannie, Pooja, Shabir, Usha.
Yes, sir.
Yes.
Yes.
So it will be 1 lakh. Because you will get this as a deduction in the form of COGS, cost of goods sold, when you sell this inventory in the future. Entity A has acquired an item of asset for 1 lakh for production of certain items to be sold by the entity. It is deductible equally over 2 years in the books of accounts. In income tax, 75,000 is deductible in year 1 and balance in year 2. So your tax base will be
25,000.
25,000 and 0. Okay, so this is done, this is done. 1 lakh, 25,000 in this case. Okay, next. Interest receivable has a carrying amount of rupees 100. The related interest revenue will be taxed on a cash basis.
Tax base is nil. Nil.
Nil, tax base will be nil, Monica?
Yes, sir.
Yes, sir.
Yes, because in my accounting,
Cash basis.
yes, it's on cash basis. So in my accounting, I would have passed the entry interest receivable account debit to interest. Okay, this is receivable. Debit 100. But tax does not recognize this. So therefore, for tax purposes, the value remains 0. Okay, so that is done. Next, an entity that follows mercantile system of accounting has trade receivables of rupees 1000. It creates a general bad debt allowance of rupees 50. However, in income tax, general bad debt allowance provision is not deductible. Related revenue is already included in taxable profit. So what will be your tax base here?
1000.
1000. I told you it's quite simple once you start looking at it in the regular way. Carrying amount will be 1000 minus 50, so 950. Okay. An entity that follows mercantile system of accounting has trade receivables of 1000. It creates a specific bad debt of rupees 50. In income tax, specific bad debt provision is deductible in the very year in which it is created. So what will be your tax base?
950. 950.
950. Yes? Okay. Perfect. 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 Yes. Next. An entity, okay, tax base of asset if economic benefits are not taxable. What is the rule if economic benefits are not taxable?
Non-taxable.
It will be equal to carrying amount of the asset. It will be equal to carrying amount of the asset. Okay. See, basically, why do they say that it will be equal to carrying amount of the asset? See, temporary difference is the difference between carrying amount minus tax base. Correct? Yes. Now,
Yes.
the income from this asset is not taxable. That means there will be no tax implication on this asset. And that is why temporary difference should become nil. Because temporary difference should become nil, they say that tax base is equal to the carrying amount. Are we okay with this?
Yes, sir.
Yes, sir.
Okay, more or less that's fine. An entity has an investment in listed equity shares, no tax on gains that arise on sale of these listed equity shares. So in this case, your carrying amount will be the tax base. Tax base will be the carrying amount. An entity has given a loan of 10,000, which is the carrying amount. Giving a loan and getting it back has no tax implications. So in this case, tax base equals to
10,000.
10,000. Quite simple. Yes. All right. Tax base of liability if such liability is tax deductible. Current liabilities include accrued expenses with a carrying amount of rupees 100. Related expense will be deducted for tax purposes on a cash basis. Example के तौर पे I have mentioned unpaid employers contribution to provident fund. Okay, so now tell me what will be the tax base?
Nil.
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 Nil. Pallavi nil. Monica nil.
Yes, sir. Nil.
Yes,
Jeannie
sir.
nil. Yes.
Nil, sir.
Jeannie
Sir, this is
confirm nil.
non-taxable. Okay.
Non. This is not deductible. Okay, so agreed. So
Yes,
this
sir.
becomes there. It will be accounted in tax books only when it is paid. So therefore, tax base is going to be nil. Okay. Next, current liabilities include accrued expenses with a carrying amount of rupees 100. The related expense has already been deducted for tax purposes or is deductible for tax purposes. So what will be your tax base?
100.
Carrying amount of 100.
100.
Tax base will be 100.
100.
Tax base will be 100. Perfect. Okay. Tax base of liability if such liability is not tax deductible. Okay. So ठीक है. Let us look at this. Current liabilities include fines and penalties with a carrying amount of 100. fines and penalties are not deductible for tax purposes. Example, unpaid employee contribution to Provident Fund. I just gave that. Okay. Section 36(1)(5)(a), read with 224(10). So now tell me.
Again 100.
Again 100.
100, sir.
100?
Yes, sir.
You, Hemant, Karthik, Shabir,
Yes, sir.
Mamta, 100? Yes. Tax base of penalties is 100. Okay. Because there won't be any tax implication on this. It's not deductible. So therefore, you cannot have any deferred tax computed on this. Loan payable has a carrying amount of 100. Tax base also will be 100.
100.
No tax implications. Okay. So that closes these 4-5 questions. Okay. Now, there are some specific items. Okay. This is also done. Now there are some special items or specific items that we have. Okay. Items that have a tax base but are not recognized in the balance sheet. Okay. Items that have a tax base but are not recognized in the balance sheet. So now this one is particularly I gave an example here, preliminary expenses. Okay. You would have studied 35D. I'm not much of an expert, but I just pulled this up from there. Preliminary expenses are recognized as an expense in determining accounting profit in the period in which they are incurred. See, earlier case, you used to show preliminary expenses as deferred revenue expenditure. You remember when you did your 11th standard and all, there was a concept of capital expenditure, revenue, and deferred revenue. Yes?
Yes, sir. Yes, sir.
In Ind AS, there is no concept of deferred revenue expenditure. It's either capital or revenue. So preliminary expenses, expenses pertaining to incorporation of an entity, setting up all those formalities. So these expenses would typically hit my P&L in the year in which they are incurred. There is no question of preliminary and amortizing or deferring it to the future. But taxable for tax purposes, they are allowed as a deduction in the later period. They are allowed as a deduction in the later period. Okay. Example, section 35D. I think 35D allows 1/5 each year. Okay. You can just check and evaluate. Okay. The difference between the tax base and the carrying amount is a deductible temporary difference that results in a DTA. Obviously, you have claimed the expenses for accounting, but will you get it as a deduction? Answer is no. So what will happen here is your treatment goes something like this. Preliminary expenses, this hits the P&L straight away. Okay, let us write, for example, let us give an amount to this, 1,000 to bank. Now, this has gone to the P&L. So is there any balance or is there any carrying amount for this? Answer is no. Therefore, carrying amount equals 0. But what the taxman says? The taxman says, my preliminary expenses should go to the balance sheet in the tax records. And every year, I will allow 1/5. 200. Therefore, tax base equals 1,000 minus 200, that is 800. Are you able to understand? Yes?
Yes, sir.
So now we are comparing this 0 with this 800. Is this difference a temporary difference? Answer is yes, because you are going to get this expense will be fully claimed over the next 5 years. It's just a matter of time. So now you will claim 800 of this expense against your future profits. So future tax liability goes down, so it becomes a DTA. So that is exactly what is mentioned here. Okay. Tax base. Okay, so this is one special case. Okay. Next one. Tax base of an asset or liability is not immediately apparent. Is not immediately apparent. Okay, this is just theoretical. Consider the fundamental principle upon which Ind AS 12 is based. The entity shall, with certain limited exceptions, recognize a DTA DTL whenever recovery or settlement of the carrying amount of the asset or liability would make future payments larger or smaller than they would have if such recovery or settlement were to have no tax consequences. ये सिर्फ पढ़ो, it is a very rare case. It is a very rare case. Okay. Consider the fundamental principles upon which Ind AS 12 is based to determine whether it becomes, to determine what is the tax base. Okay. So that's about it. Okay. All right. Fine. Now, you can do this first question for homework. I took the example of 1,000 rupees. Institute has given the same example with 1 lakh rupees. Okay. Bas wahi farak hai. Otherwise, there is no other difference. Okay. So do this for homework. Public issue expenses. Entity would have written off the public issue in the first year. Tax loss permit deduction over 5 years. Same like above. Okay. Same like above. Allow deduction in future, hence deferred tax asset. Okay, or rather what we call it as a deductible temporary difference. Okay, deductible temporary difference. Okay, now items of assets or liabilities where a tax base is not apparent. Okay, so this is done, this is done. Okay. Now, tax base is not apparent. Entity A has an industrial undertaking that consists of land, building, plant, machinery. Contemplating to dispose the entity, it has the option to recover the carrying amount of the entity either by disposing the entire entity as a slump sale. You remember we have slump sale under the Income Tax Act? Yes?
Yes. Yes,
I
sir.
think section 50B or something, right?
No.
So under the slump sale, are you able to attribute individual amount to assets and liabilities? Answer is no.
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 Single
So
consideration for the entire thing.
yes, it's a consideration for the entire division as a whole. And then the purchasing entity will have to do a purchase price allocation for the items that it has purchased, or dispose of each asset on a piecemeal basis. So they have two options, either go for slump sale or go for a piecemeal basis. Depending upon the manner of recovery and the period of holding, the carrying amount may be subject to indexation benefit. The recovery may be charged either as a business profit or capital gains. Obviously, if you go on a piecemeal basis, there may be some assets on which you can claim indexation. There will be some assets, which is the depreciable ones, which go under the block. So therefore, no indexation benefit. It could be capital gains if it is a slump sale. It could be business profit if I sell it on a piecemeal basis, my inventory item. So the treatments are different. The treatments are different. Again, it could be either a long-term gain or a capital gain or a short-term gain. As at the end of the reporting period, the entity is not sure of the manner and time of recovery. So then the question is, when there are so many uncertainties surrounding the tax treatment, how do I actually treat this? How do I determine the tax base? So the standard says that you refer the fundamental principle. It is inherent that the reporting entity expects to recover or settle the carrying amount of asset or liability. Okay, so that is the fundamental principle. If there is any asset, you intend to recover that amount by generating income. If it is a liability, you intend to settle that. So now, if it is probable that recovery or settlement will have an impact on the future tax payments, then they would, if such payments would have no tax consequences, then you have to recognize a DTA or a DTL. So it depends. It depends. What they are trying to say is, you have to understand that my fundamental principle is I want to recover the cost of my asset or I want to settle my liability. If this recovery of cost or settlement of liability will have future tax consequences, then you will have to determine the deferred tax asset or liability accordingly. Only that is mentioned. So in my opinion, for theory, this question can be looked into. Otherwise, there is no practical problem as such that is there for this type of question. Okay, is it okay? आगे बढ़े? Yes, can we proceed further? Okay, fine. Acha. Now, you remember I had given you this particular question for homework. ये वाला question. Yes, question number 1. Yes.
Yes,
दिया
sir.
था. तो यही question I have extended it to illustration 4. Okay. Illustration 4, you are given the balance sheet. Only changes, we got the current tax expense of 28,14,000 there. That is adjusted here. Okay, that has come here as current liabilities. Thoda balance sheet ऊपर नीचे है, assets has come on the left, liabilities on the right. Opposite होना है. Don't look at it from the perspective कि सर ने तो कुछ भी बना के दिया है. Sir has done this to explain tax implications to you. That's it. Otherwise, there is no such thing. Okay. And the same data that I had earlier, I have repeated. Okay. So what this question asks you to do is calculate the tax base of its assets and liabilities as at 31st March 20X8. Can you do this? Yes? Sure?
Yes.
Okay. So I leave this particular part to you for homework. Don't worry, we still have one more session. So if you are unable to solve this, please let me know. But I have also shared this solution sheet with you. So carrying amount is there and the tax base also I have given to you. So if you are having any doubts, you can always refer to this. Is it okay? Yes?
Yes, sir.
Yes.
ठीक है. तो प्लीज ट्राई करो. सिर्फ ये मत बोलना सर समझ में नहीं आया, बिकॉज देन आई विल आस्क व्हाट डिड यू नॉट अंडरस्टैंड. ओके, तो genuinely try it out so that you will be able to understand. Okay, all right, fine. Now coming to temporary differences, this is nothing but the difference between carrying amount of an asset or liability and its tax base. This is the difference between carrying amount of an asset or liability and the tax base. So I have already explained to you what is a deductible temporary difference, what is a taxable temporary difference. Taxable temporary difference, it gives rise to tax payments in the future, results in taxable amounts of future periods. And just a minute. Yes, sir. Good. Okay, yeah. So coming to the temporary differences, we have taxable and we have deductible temporary differences. So when I talk about my taxable temporary differences, they give rise to tax payments in the future. And when we talk about deductible temporary differences, they result in tax savings in the future. They result in amounts that are deductible in determining the taxable profit. Deductible means in future I can claim a deduction. That means in future I will have a tax saving. Is it okay? Yes. यार ये हमने करा है. Okay. So I think it's clear. If carrying amount of asset is greater than tax base of asset, we saw in our example, 6,40,000 versus 6 lakhs.
Is a DTL. Deferred
This
tax
gives
liability.
rise to a DTL. Okay.
DTL.
एक याद कर लो, बाकी सारे opposite हो जाएंगे. But I know that this is not as easy as it looks. Give me 1 or 2 slides. You come to a very simple rule for understanding whether it gives rise to a DTA or a DTL. Okay.
DTL.
All right. Now, AS22 used the word timing differences. Okay. Ind AS 12 uses the word temporary differences. Okay. सिर्फ word play है. The impact is the same. Okay. So timing differences, interest income recognized in income statement on time basis, but recognized in taxable profit on cash basis. That is one. Depreciation different under Companies Act and Income Tax Act. We already saw. Development costs capitalized and amortized over future periods in determining accounting profit, but deducted in determining taxable profit in the period in which they are incurred. Okay, so that is just examples of timing differences which we have already seen. Coming to other differences, revaluation difference. So Ind AS permits revaluation. So revaluation also would give rise to a temporary difference. Tell me one thing. In your AS 22, was revaluation there under AS 10?
Yes, sir.
Yes, sir.
Fixed assets.
Revaluation was there in AS 10. But
Yes.
did you take the impact of revaluation for assessing deferred tax asset and liability?
No, sir.
It
No.
would come in the form of adjusted depreciation charge. Yes.
Sir.
So therefore,
Yes.
this is the better approach. Why? Because the whole intent is that I am in a better position to determine my deferred tax asset or liability. All right. There, what would happen if I had an upward revaluation? Part of the depreciation I could adjust probably against the reval reserve or something like that. I recollect something vaguely. Okay. So you could do that. But here, we are comparing the carrying amount of the asset, which could be with revaluation, without revaluation, against the tax base. So automatically, all the impacts of revaluation, impairments, depreciation, accelerated depreciation, all these automatically get covered. And therefore, the balance sheet approach is a more comprehensive approach as compared to the P&L approach that we had studied when we were doing AS22. P&L approach was a very narrow approach in the sense that it approached your timing differences only based on items appearing in the P&L. But as we all know, items do not necessarily appear in the P&L. Revaluation goes and sits in your revaluation reserve. वो तो P&L में आएगा ही नहीं. Then does that mean I will not have any deferred tax implication? I will definitely have a deferred tax implication. And therefore, your other differences could arise either on account of revaluation or on account of business combinations. Examples. Okay, this is just examples. So business combinations, your assets and liabilities, when you are doing business combination under Ind AS 103, they will be taken over at fair value. They will be recognized at their fair values. Tax purposes, I don't do any fair value adjustments. So therefore, it gives rise to a temporary difference. Is it okay? Yes. These items you will not see under the AS22 regime. Okay. Generally, you won't see them under AS22 regime, but it is these items, which you will see under AS 22 plus Ind AS 12. Whereas these items are typically restrictive to Ind AS 12 alone and not to AS 22. Are you able to understand? Yes. So
Yes, sir.
this becomes a more comprehensive manner of calculating your deferred tax assets, your deferred tax liabilities. ठीक है? Pallavi, all okay? Karthik,
Yes, sir.
Mamta, yes.
Yes,
Shabir,
sir.
Pooja, Nisha,
Yes, sir.
Yes.
Hemant, all clear? Yes. All right, fine. Okay. Hemant, okay, fine. All right. So now let us understand the general rule. See, dekhte, we have completed 4 steps. Okay. Now, what is the rule? What is the rule? If I look at the carrying value, which is greater than the tax base, understand the rule carefully. Carrying value greater than the tax base of an asset, then the deferred tax will be a
Liability.
liability.
Yes.
Okay?
Liability.
Any asset. Could be property, plant, equipment, it could be debtors, it could be inventory. जो भी है, if the carrying value is more than the tax base of an asset, the resultant will be a DTL.
DTL.
Okay? So rule क्या है? If carrying amount is more than tax base, inverse याद रखो. If it is relating to a liability, it gives rise to a deferred tax asset.
Assets.
It gives rise to a deferred tax asset. But if carrying value is less than the tax base, direct. If it is pertaining to an asset, then what will be created is a DTA. If it is pertaining to a liability, what will be created is a DTL. Are we able to understand this?
Yes, sir.
Yes. So my
Yes.
fundamental rules are, if carrying amount is greater than the tax base, I have to follow inverse relationship. I will check whether the underlying is an asset. If it is an asset, the resulting will be a DTL. If it is a liability, it will be a DTL. If carrying value is less than the tax base, there will be a direct relationship between the underlying and the deferred tax. Underlying is an asset, deferred tax also will be an asset. Underlying is a liability, we will create a deferred tax liability. Okay, I have given some examples also so that you can understand. In those examples, it will give rise to a DTA or a DTL. Any doubts? And when carry value equals the tax base, no deferred tax. Okay. All right. This last line I could have avoided, but कोई पूछते हैं कि सर equal हुआ तो क्या करेंगे? या कार्तिक, tell me.
जिस तरीके से आपने एसेट के लिए बताया था कि हम डेप्रिसिएशन इफेक्ट कंसीडर करते हैं कि अगर हमारा कैरिंग वैल्यू ज्यादा है और
Yes.
इनकम टैक्स में हमारा जो टैक्स बेस है वो कम है एसेट का,
Yes.
तो हमें उसका डेप्रिसिएशन जो है कम क्लेम
Yes.
करने को मिलेगा. दैट इज व्हाई वी क्रिएट अ डेफर्ड टैक्स लायबिलिटी. ये हमें आगे
Yes.
चल के
In
ज्यादा
the
टैक्स पे
future,
करेगा.
lower depreciation मिलेगा.
यस, लोअर
Yes.
डेप्रिसिएशन हमें मिलेगा, सो वी विल हैव टू पे मोर टैक्सेस.
Yes.
लायबिलिटी के लिए हम इसको कैसे समझ सकते हैं सर, बिकॉज उसमें मैं डेप्रिसिएशन इफेक्ट
उल्टा.
रिलेट नहीं कर पा रहा.
Liability also I explained to you, na? If you look at my question, this was a liability, right?
यस सर.
So 40,000 was interest accrued, जो हमने पे नहीं किया, right?
यस यस.
So if you remember this question, 40,000 was interest accrued on borrowing. The tax department allows only when it is paid. So 40,000, I recognize it as a liability in my books. This liability I can claim as an expense in the future when I actually do the payment, right? Correct? Karthik?
Yes, sir.
So therefore, this difference is what is allowable. this difference of 40,000 is what is allowable in the future. समझ में आ गया?
यस सर,
So
थोड़ा टाइम लगेगा ऑब्जर्व करने में।
it won't be depreciation का example तो नहीं आएगा यहाँ पे, obviously, as you said. Okay, but in the case of liability, you look at whether you are able to claim that liability against your taxable profits in the future. If you are able to claim, it gives rise to a deferred tax asset. Okay. अच्छा.
Yes, sir, that would work.
Coming to assets again, depreciable asset की भी अगर हम बात करें, तो let us suppose hypothetically you have a slower depreciation under Income Tax Act. चीजों को उल्टा कर दो. Carrying amount is 6 lakh, tax base is 6 lakh 40. तो आगे चल के I have tax depreciation of 6 lakh 40 which I can claim. So therefore, that will give rise to a deferred
DTA.
tax asset
sir.
in future.
Yes.
Yes? समझ में आ गया कार्तिक?
Yes, I got it. Thanks a
Oh,
lot, sir.
perfect. Yes. So that takes care of DTA. Yes.
सर जो लास्ट आप दिखा रहे थे,
हाँ
लास्ट
बताइए.
स्लाइड.
Yes, एक सेकेंड यार. हाँ बताइए. Yes.
नहीं सर, जो हाँ ये वाली सर. सो जिसमें
Yes.
इन दिस वी हैव टू, मतलब इसलिए अपन कर रहे हैं कि अपना जो डीटीए दिखेगा सेकेंड ईयर में वो अक्यूमुलेटेड दिखेगा
Yes.
24,000 से.
Yes, that's right.
ओके.
Absolutely right. आपका accumulated DTA at the end of second year is 24,000. First year में your DTA will be 12,000, 40,000 into 30%. Accumulated DTA, because क्या हो रहा है यहाँ पे? The liability is getting accumulated year after year. So DTA also gets accumulated year after year. And this difference is what will hit my P&L. Did you follow?
ओके सर.
समझ में आ गया? Because what is happening, I am noticing that many of you are still a little uncomfortable on the balance sheet approach. I'll tell you the reason why that could be the case. Okay. That could be the case because we are probably trained to view this from a profit and loss approach. That is the shift. That is nothing to do with conceptual clarity. हमें ये सिखाया गया है कि deferred tax asset liability उसी साल में बनेगा. But here this is not the case. Here it is more on the accumulated balances that are appearing in your balance sheet. Balance sheet is a series of P&L items that has accumulated, right? It could be something of the current year, it could be something of the past years as well. And therefore, on this balance sheet approach, जो भी मुझे balance मिलेगा, that is not the DTA, DTL I have to create. That is the DTA, DTL that will be there at the end of the period. Okay. The end of the period DTA minus the opening DTA, that will represent the differential expense or differential credit that you have to recognize in your P&L. Are you able to follow everyone?
Yes, sir.
Yes.
Yes,
Right?
sir.
Shabbir, is it totally cleared?
Yes, sir. Yes, sir. Because
Yes.
earlier we used to see like if expenses are not allowed, then we will create a DTA.
Yes. Earlier आप क्या करते थे? आप 40,000 पे 30% करते थे. Yes.
Yes, sir.
You would do 40,000 on 30%. So
Right.
ultimately, 12,000 accumulate first year, another 12,000 in the second year. So end of 2 years, it is 24. यहाँ पे reverse चल रहा है. I get 24 and then I make a credit or a charge of 12,000. Is it
Yes, sir.
okay?
This tax-based approach is more appropriate, sir.
Yes.
Presentation wise good.
Presentation wise it is good and it resolves a lot of your issues also, like impairment comes into picture, revaluation comes into picture, and then you have your liabilities workings which comes into picture. Okay, see, advocates of the P&L approach have also found out problems in the balance sheet approach also. But filhal, you take this for your examinations. Okay, there are various authors who have said that a modified approach is better. For some items you can do a P&L, for some items you can do a balance sheet approach. Okay, so advocates are many for both as well as for uh, uh, the modified approach. Okay, but
Sir, what is modified approach?
modified approach means for certain items you follow the P&L method, for certain
Okay.
items you follow the balance sheet, both in the same financial. Okay,
As like a hybrid approach.
hybrid approach. That's right. Hybrid or combo of P&L, combo of balance sheet approach. Hey, but don't break your head on that because Ind AS 12 does not allow hybrid. Ind AS 12 is a pure balance sheet approach. आप सिर्फ balance sheet approach पे ही ध्यान दो. For your own interest, you can look up on the net for articles that advocate P&L, articles that advocate balance sheet, articles that advocate a hybrid approach. Okay, it's perfectly fine. Okay, all right. Okay, so now we move on to okay. So we have a lot of examples coming up. Okay. कोई बात नहीं, examples कर लेंगे. So then that will close up half of my topic for today. We wind up after we close these examples. Okay. An asset which costs rupees 150 has a carrying amount of 100. So carrying amount equals 100. Cumulative depreciation for tax purposes is 90. So what is your tax base? Bolo.
90.
Tax
90.
tax
90.
ओए tax base 90 होगा या 60 होगा?
60, sir.
60.
90 minus
ध्यान से पढ़ो. Its
25%.
cumulative depreciation for tax purposes is 90. Okay, so your 1 second. This is 9.28, right? So yeah, tax base of the asset is 60 and carrying amount is 100. So carrying amount is greater than the tax base. This is relating to an asset. So this gives rise to a DTL. That is a temporary taxable temporary difference. Taxable temporary difference.
So your
Are we,
written notes are not visible.
screen is not visible. Huh?
Written notes.
1 minute. 1 minute. I think this is a problem here. Just a second. It will come. Yeah. Is it
Yes, sir.
come
Yes, yes.
visible now? Yes.
Yes, sir.
It's hanging again like last. Okay. Fine. So this gives rise to a taxable temporary difference. Okay. All right. Okay. Next. Interest revenue is received in arrears and is included in accounting profit on a time apportionment basis, but is included in the taxable profit on a cash basis. So, what does this mean? I have interest receivable as an asset, correct?
Hmm.
There is a carrying amount for this. But
Hmm.
is there a tax base for this interest receivable? Answer
No.
is no. There is
No.
no tax base. So carrying amount is greater than the tax base. So again, this gives rise to a taxable temporary difference. Have you
Difference.
understood?
DTL.
Yes.
Yes.
Yes,
Okay.
sir.
All right. Next. Why is this getting? Give me a minute. चला गया. second. This is creating problems. Just a moment. Okay, fine. Revenue from sale of goods is included in accounting profit when the goods are delivered, but is included in taxable profit when the cash is collected. So tell me, what will be the tax base? What will be the carrying
Then
amount?
carrying amount.
Carrying amount will basically be debtors account debit to sales, correct?
Yes, sir.
So debtors will be your carrying amount. Revenue is booked on a cash basis. So therefore, debtors value will be zero.
Zero.
No accumulated value. So carrying amount greater than tax base. But point to notice, there is also a deductible temporary difference associated with related inventory. Deductible difference क्यों होगा? Because COGS, cost of goods sold, yes or no? बोलो
Yes,
यार.
sir.
See, inventory will drop for accounting purposes. Yes, because I booked a sale. Since I booked a sale, I'll book a cost. Since I booked a cost, inventory value will come down. Yes or no?
Yes, sir.
Yes, sir.
Yes, sir.
Whereas tax के केस में वो नहीं होगा. So inventory for tax purposes will be higher, and therefore this gives rise to a deductible temporary difference. Are you able to understand?
Yes, sir.
Yes, sir.
Yes. Okay. So what I will do is, this is done, this is done, this is done. Depreciation we have seen numerous times. Okay. What I want you to do is, I want you to try all these questions for homework. Okay. See, है क्या इसमें? You just have to put in your little bit of time. Maybe out of all the homework questions I have given you, this is the maximum I am asking, because today's questions, what I gave, will require at least 1 to 1.5 hour of your time investment. Okay. So please try this question. This also. Business combinations, you leave this. You people have not yet studied. Okay. So this, you leave it. I will cover this separately. All questions relating to business combinations, you can leave. Hyperinflation, you can leave. Okay. All right. Deductible temporary difference, homework, homework, homework. Okay. I leave this for homework. I leave this also for homework. All of these I have discussed, or we have discussed. Okay. Homework. Business consolidation, छोड़ सकते हो आज के लिए. I will explain it to you in the next class. Okay. Okay. Can you try this out for me?
Sir, must be, because बिना उसके ये ढंग से आएगा नहीं.
So my whole purpose is, see, I have given you all the principles for understanding. कुछ नहीं करना है. You have to think as if you are maintaining two sets of accounts. One is for Ind AS, one is for tax. दोनों में entries pass करो. Then you look at the carrying amount, look at the tax base, compare and identify whether it is a taxable temporary difference or a deductible temporary difference. इतना आप identify करोगे, that is more than sufficient for you to work on your understandings. इतना करोगे आप हमारे लिए?
बिल्कुल
Yes.
सर.
Yes,
Yes,
sir.
I
Yes,
will
sir.
definitely address your queries only if you have done. Okay.
Yes, sir.
See,
Yes,
if
sir.
I spend time to do this, बहुत सारा time चला जाएगा. Okay, so I want you to think, and once you do that, do try question number 5. Okay, वही वाला question. There I made you to identify the first was determination of current tax. See, we are building a full-fledged case on a realistic basis, on a practical basis. I took you through calculating the current tax. Then, based on the financial position, the next question was identifying the tax base. Then, based on that, you are required to calculate the temporary differences and the deferred tax. So, it is a full-fledged case that we are running you through. Okay, so you are able to understand how this actually happens practically also. Okay, so now coming to the next one. Goodwill. Okay. So calculate the goodwill arising on consolidation. Temporary differences. Okay. Okay. Just give me a minute. Want to see how many slides are there? It's almost 100, right? Okay, disclosures के ही 10-12 slides है, उससे भी ज्यादा almost 20. ठीक है, no issues. All right, fine. Okay, fine. The question is now, which tax rate are you going to apply for deferred tax? Will you apply the existing tax rate or will you apply the tax rate that is expected to be there in the future, which is substantively enacted already? क्या लगता है आपको?
Second one.
Expected. Because the deferred tax is expected to materialize only in the future. That is why using the current tax rate is not really advisable. It's always preferred that we use a future tax rate. But future tax rate, though, I only know the one that is there for the next budget. So therefore, in practical, in Indian terms, okay, मुझे 2 साल के बाद का टैक्स रेट नहीं पता, but I know that some of these items will be settled after 4 or 5 years. So therefore, in that case, जो substantively enact हुआ है, I will take that rate only and do the recognition of my asset or of my deferred tax asset or deferred tax liability. Is it okay?
Yes, sir.
All right, fine. So that takes care of the basics. ठीक है. Business combinations के questions है. All right, fine. These things, I think all these items we can cover it up in the next class. Okay. तो आज के लिए इतना काफी है. Anything else that you have, any query on what we have discussed till now or any issues that you have, you can please ask.
So my
So
query
can you
is not
just
Take it. Okay, Nisha, you can speak. Tell me.
can you just summarize what is the concept of tax base, so just as a revision?
Okay,
The
fine. I'll do
only
that.
tax base.
ठीक है, I'll do that. अच्छा, पूजा, आप बताइए, कुछ पूछ रहे थे आप.
Sir, my query is not related to today's session, but it is a general question for me. Many
Okay.
a times, job profiles ask for us a tax accounting skill. Does it exactly what we have studied today?
Tax accounting skill will have this definitely. Okay, you will have this profile coming in because they may probably be in respect of various group entities which have, a lot of transactions where you have calculations of tax, deferred tax, income tax. So, okay, it's quite related to this also. Yeah. But at the same time, whether it is direct tax or indirect tax. So that is something that you will have to look into. Okay. All right. So to summarize what we have
Sir,
covered.
I
Yes,
have
Monica, बताइए.
सर एक्चुअली आपने जब वो पॉइंट समझाया था जो आपने मॉड्यूल से समझाया था पेज नंबर 922.
Okay, 1 minute. 922.
दैट
Okay.
टाइम मेरा नेटवर्क स्लो कुछ सही नहीं था, तो आप मुझे वापस से वो पॉइंट समझा देंगे. सो हाउ शुड वन प्रोसीड से लेके जो है.
Okay, 1 second. Just a minute. Okay, Hemant, you can proceed. Yeah, you want to understand this one, right? जो हमने ये करा है. This conclusion you want to understand, right? 922 के पेज पे.
यस सर
Okay.
जो
So see,
पॉइंट.
what happens in the slum sale is, so it wants to dispose of an undertaking. So when I talk about disposing of an undertaking, I could do it on a slum sale basis. I could do it on a piecemeal basis. I could do it on numerous methods, numerous bases, whatever is there. And therefore, when I talk about, when I talk about really putting forward the tax base, it is very difficult for me to identify the tax base because I don't know in what manner am I going to actually recognize. I don't know in what manner I'm actually going to recognize the uh, amounts. If I go for a slump sale, can I identify the tax base of that particular asset? Can I identify the tax base of that particular liability? I don't know because I don't have the independent values of that. But if I go for a piecemeal distribution, will I have individual carrying amounts? Answer is yes. But will I be able to determine the tax base? Again, answer is yes. So now the whole point is, am I in a position to do this identification? If you are able to do this identification, well and good. If you are unable to do this identification, then you will have to understand that, your fundamental requirement of Ind AS 12 is to identify how the entity expects to recover or settle an asset or a liability. If it is probable that recovery or settlement will make future tax payments larger or it will impact the future tax payments, then you have to book a deferred tax asset or a deferred tax liability. That is the only thing which the standard requires you to do. Okay. Otherwise, I really don't know how can I practically identify this. Okay. So if you are able to prove that by taking a particular stand, my future tax liabilities or future tax savings is going to happen, please go ahead and recognize the deferred tax. बस इतना सा ही है उसमें और कुछ भी नहीं है. Okay.
ओके सर
All
थैंक यू.
right. Coming to Nisha's last query on summary of today's tax base. So what do you mean by tax base? It is the amount attributed to an asset or a liability for the purposes of tax. Very simple. So practically, if I have to explain, you can presume you are maintaining two books of accounts and you are taking journal entries for the tax records separately. So those journal entries will give you certain values, certain balances in the tax records. Those balances for tax purposes will end up becoming your tax base. So this is the very, very simplistic view, and this view will never go wrong. This view will never go wrong for you. However, if I use the technical language of the standard, the tax base is specifically defined as second. The tax base is specific, not this one. 1 second. Okay. The tax base is specifically defined for an asset as the amount that you can adjust against the profits that the asset generates in the future for tax purposes. Very simple. So if I have the asset, I have to meet the cost of that asset. So I will debit it to the P&L. By this debit, I am getting a credit somewhere. So if the credit that is generated can be what you can say, if the credit that you generate or the revenue that you generate can be made available for utilizing the asset value in the future, for recognizing the cost of this asset in the future in the form of depreciation or write-off or whatever it is, then that amount will be your tax base. If I talk about liability, it will be nothing but the carrying value minus amount that is deductible for tax purposes in respect of that liability in future periods. So we saw the example 40,000 of the value of the liability versus what is deductible in the future is entire 40,000 if it is paid. So if the entire 40,000 is paid, then your tax base ultimately falls back to zero. So that is how you are going to understand the treatment of your tax base. Okay. Why do I need to identify the tax base? Because the difference between your carrying value and the tax base is ultimately what goes in as your uh, temporary difference. There could be some permanent difference also, non-temporary. We'll come to that in the next class. So whenever we have temporary differences, we then do a segregation between whether it is a taxable temporary difference or a deductible temporary difference. We multiply it by the expected tax rate to arrive at a DTL or a DTA respectively. Okay? Is it okay?
Sir?
Yes, sir.
Yes.
Thank you, sir.
Thank you.
सर मोर
Yes.
क्वेश्चन सर वी मतलब हम ये कह सकते हैं कि जो टैक्स बेस है वो हम जो पुराने P&L अप्रोच में करंट टैक्स कैलकुलेट करते थे द सेम थिंग विच इज बस कुछ डिफरेंस जो नई चीजें आई हैं लाइक रिवैल्यूएशन और कॉम्बिनेशन
करंट टैक्स तो बेटा हम अभी भी उसी हिसाब से कैलकुलेट करते हैं जैसे हम पहले कैलकुलेट करते थे. ओके, सो देयर इज नो चेंज इन द करंट टैक्स वर्किंग्स. Current tax is always the source of current tax under AS 22 and Ind AS 12 is only one, and that is your statement of computation of income. Computation of income में जो आपका tax liability आता है, that is your current tax provision, and this was the same under AS 22. This is the same under Ind AS 12. Change is happening in deferred tax calculations. Okay.
ओके सर.
Yes. Pallavi, anything else?
सर जो पीएनएल बेस्ड जो क्वेश्चन था ना फर्स्ट बड़ा वो होमवर्क के लिए
Yes.
दिया था
Yes.
हाँ वो वैसे एग्जाम्स में आते हैं क्या
नहीं आएंगे. It won't
जस्ट
come.
फॉर अंडरस्टैंडिंग पर्पस
That is for your understanding. Okay? Because that is such a big question. Maybe उसको trim कर देंगे. They'll trim that question to 2 to 3 adjustments and give you in the exam. Okay?
तो पीएनएल अप्रोच सिर्फ सॉल्व करना पड़ेगा या बैलेंस शीट अप्रोच
Current tax will be the computation. जो P&L approach होगा. Then
Okay.
the deferred tax base, please follow the balance sheet approach. You will defeat the purpose of today's session if you do the P&L approach. Okay?
ओके
ठीक है? All right. Thanks everyone. I think all queries are
Thank you, sir.
addressed. Thank you.
थैंक यू
Thanks,
सर.
Jeannie.
Thank you,
Thank
sir.
you. Yes. Okay. Thanks everyone. Thank you. Sir, session conclude.
Yes, sir.
Thanks. Thank you.